Is it too late to buy Bitcoin in 2025? That's a question that's on everyone's mind right now. After many years of explosive growth, some believe that the opportunity has already passed, while others believe that this is just the start of an even bigger bull market. In this video, we're going to tackle the question, is Bitcoin cheap right now, even though we're hovering around the 100K per Bitcoin, or is Bitcoin expensive and should we be taking some profits? Also stick around because I'm going to share a surprising shift that's happening in the market right now that nobody is really talking about and it's not yet priced in. And this could change everything. All right, before we get started, do me one quick favor. If you enjoy watching videos like this one where I break down complex topics in the world of investing and crypto, then make sure to smash the like button and subscribe to my channel because I'm going to be posting regular videos just like this one to help you to maximize your profits in this crypto market. Now, let's dive in. Is it too late to buy Bitcoin in 2025? We're going to reveal the truth in this video. So, as you're watching this video, Bitcoin could be slightly below 100K, slightly above 100K. For the past few weeks, it has been hovering around 100K. And 100K is a massive milestone. I mean, 10 years ago, 7 years, 6 years ago, nobody would have believed that Bitcoin would hit 100K, except for the true core believers, which have been holding on to Bitcoin since the early days, 2009, 2010, 2011. But that's just a very small portion of all holders. In general, people just, buy and sell and, they get in and out of the market in the hopes of getting rich quick. But very few actually have a strong conviction to hold over the long term. So the question is right now, is 100K Bitcoin cheap or is it expensive? And this is a very big signal to sell your Bitcoin. Well, let's first explain psychological levels. So here, there's this famous video circulating on the internet of a guy that recorded himself when Bitcoin just crossed the $100 level, so $111. So here you see a video of him and he's super surprised. He's like celebrating, wow, what a massive milestone. Now, a bunch of years later, Bitcoin has crushed not only the $100 level, but also the $1,000 level, the $10,000 level, and more recently, the $100,000 level. All of these are massive psychological levels. Every time people believe like, no, we're never going to go this high. And then again, this milestone gets crushed. So this person reenacted his video and he re-recorded himself when Bitcoin hit 100K, which was a really nice video. But the reason why I'm sharing this is every time that we hit these psychological levels, people are surprised, like, wow, did we really do this? And yes, we really did that. So to put everything into perspective, $100,000, that's 0.1 million. Okay, so we are actually very close to a million. We're only a factor of 10x removed from $1 million Bitcoin. Now, Bloomberg has a terminal which many people in the finance space are using in order to trade and get financial information. And they actually changed their unit for Bitcoin from thousands to millions. So right now, what you see here on the screen, Bitcoin is denoted in millions. So 0.1 million, that's 100K. So already people are starting to use this as a way to denote Bitcoin. And we call this unit bias. Why would Bloomberg want to denote 100K Bitcoin in 0.1 million? Why? Well, because we have the tendency to like to buy things when they seem cheap. We always want to get bargains. We want to get discounts. And when you hear $100,000 Bitcoin, that sounds super expensive. But when you hear 0.1 million, that still sounds cheap. It's not a million yet, it's 0.1 million. So by noting it as 0.1 million, it sounds cheap and it might attract even more people into the market. So we humans have the tendency to find cheaper alternatives when you feel like you've missed the boat. And some marketeers within the crypto space really understand how to play into this. So the biggest example is in the previous bull market, there was this campaign by Floki. Floki was some kind of derivative meme coin of Shiba Inu. And there were all these billboards and advertisements on metros, buses, billboards. And it said, hey, did you miss Doge? Because Doge was pumping so hard. It was already quite expensive in people's perception. Then you can still get Floki because Floki is still cheap. And then you still have a lot more room to grow. And if one day Floki achieves the same price as Doge, then you will be a whatever millionaire, or you would have made a lot of money. So this is the whole thing that people in the crypto space are looking for. They believe, nah, I missed the boat. I need to invest in something cheaper. But the question of is something cheap or expensive depends what we compare it with. And our brains are really great comparing mechanisms. So what do we compare it with? Well, we can compare it in two different ways. First of all, we can look in the rear view mirror and we can look at all of the price history that's behind us. And yes, Bitcoin has come a long way from being worth less than $1 to now being worth over $100,000. So if you compare Bitcoin to all of these previous moments in the market, yeah, then Bitcoin is expensive right now. But is that the right measuring stick? Is that the way that great investors become super wealthy, by just comparing the current price with the past? No, it's not. Because the past is a past and the world has changed. So comparing stuff to the past will not give you a correct and accurate measuring stick in order to make your conclusion. So what we need to do if we want to get a right conclusion about whether Bitcoin is cheap or expensive, we shouldn't look backwards, but we should look forwards. And here's a picture of Magnus Carlsen. Magnus Carlsen is a chess grandmaster. And whenever you study chess grandmasters, they have the ability to think 10 to 20 moves ahead. The moment they start the game, they're already visualizing a path to victory. And we humans, we average humans that are not grand chess masters, we don't even think one move ahead. You know, we just live in the moment and we think, how can we make money right now? Instead of what is going to change in the world, which will allow me to make a lot of wealth in the future if I position myself right to catch the wave. So if you want to be great investors, we need to learn how to think like chess grandmasters like Magnus Carlsen. And there's a bunch of videos of him on the internet. It's really interesting to analyze and observe him. So I am always a fan of going to first principles. So again, another person that I gain a lot of inspiration from is Elon Musk. I recently read his biography. And in his biography, it's explained that whenever Elon Musk faces a very complicated issue, for example, let's build a rocket to go to Mars, then that's a massive problem that is very overwhelming for most people. However, Elon Musk always tries to boil things down to the most simplest form. And that's what we call first principles. And that's also how we came to the conclusion that, you know, sending rockets to space is super expensive because we don't reuse the rockets. So if we want to make space travel more cheap, then we need to build reusable rockets. And the fact that we haven't built reusable rockets in the past doesn't mean that we shouldn't build reusable rockets in the future. So bringing down complex subjects into very easily understandable bits and pieces. And the same can be done with Bitcoin. So if we want to understand Bitcoin's price, we need to look at two things, supply and demand, because in economics, the price gets determined by supply and demand. Now, I want to take a little sidestep over here, and I want to talk about the internet. The internet was invented in the 1950s. At that time, it was a military technology. It was mainly used to alarm military bases against a potential nuclear strike from the Soviet Union. Later, the internet was adopted by academics and then the early adopters. And then we saw the whole internet boom. We saw massive companies like Amazon, Tesla. No, what am I saying? Not Tesla. I'm too much in my head with Elon Musk. Amazon, Apple. Later, we saw Facebook, Google. So yeah, all of those companies are offsprings of the internet revolution. And right now, when we're looking at the adoption of the internet, so when we are plotting the adoption of the internet to the adoption of Bitcoin, we actually see that Bitcoin is following a very similar adoption curve. So imagine today, most people will not be able to navigate to an unknown place without using Google Maps or an equivalent app. Today, the internet is such a critical component of our daily lives. Even you watching this video on YouTube, that would not be possible if the internet wasn't here. So internet is now completely integrated into our daily lives. And if Bitcoin is following the same trajectory, even, it's even gaining faster adoption than the internet was doing, well, then imagine how many people would adopt Bitcoin in the next 5 to 10 years. And that means that now we're still early because the internet followed an exponential adoption curve. And now we are just at the early phases of this exponential adoption for Bitcoin. So one great way to look at it is the adoption curve. So here, this chart shows that whenever a new technology is introduced to the masses, we see that it happens in phases. We see, firstly, a very small group of people, the innovators, adopt a new technology. In the case of Bitcoin, that is the academics, the developers, the cryptographers. Those generally adopt the technology the first because they understand it. It's very technical. It requires some technical knowledge, some deep knowledge to really make sense of what Bitcoin was all about in the early days. Then the early adopters came. So these were the people that were doing their research and that actually took the risks to invest early into Bitcoin. Then later on, we saw that the early majority came in. I believe now we're at the phase where the early majority has entered the market. However, we are about to enter the phase of the market where the late majority and the laggards are entering the market. Why? Because the Bitcoin spot ETFs and all of the innovation that's happening around Bitcoin, all of the pro-crypto rules and regulations that we're expecting to get under a Trump administration will make it a lot easier for people to gain exposure to crypto. Also for crypto companies to establish themselves without fearing to be attacked by the SEC and other governmental entities. So I do believe that now we are at a pivotal point in history where adoption might go really fast. So we're still early, but this might change in the next 6 to 10 years. So people that rode the internet wave early, well, here are some examples. Jeff Bezos, he created Amazon, of course. Nowadays, it's completely integrated into our lives. It's one of the go-to platforms when you want to order stuff online. Mark Zuckerberg, of course, the founder of Meta. Bill Gates, founder of Microsoft. Sergey Brin, founder of Google. So these people are now in the Forbes list. Jeff Bezos, 244 billion. Mark Zuckerberg, 214 billion. Bill Gates, 107 billion. Sergey Brin, 153 billion. So these people made so much money. And of course, they are founders of these companies. But, the first few rounds of investors that invested in these companies also made generational wealth. I'm talking about hundreds of millions, even billions. And investing in technology early can be an absolutely game changer for your wealth. Now, I do believe I'm not a very big fan of investing in stuff just after it launched because the risk is just too high. I like to invest in stuff early. However, I still want to see track record of adoption. So I still want to see proof that something is sustainable and that it's growing. And that proof, in my opinion, we're already seeing it with the current adoption in the market. When we're looking at these statistics, we already see 15 years of track record of Bitcoin. We see that the adoption is growing, more and more market participants are entering. And to me, that's a sign that everything is about to take off very soon. So here's a question. Did you already miss the boat? Well, here I want to share an example. So I'm originally from the Netherlands. You can probably hear it from my accent. Sometimes there's people in the comments that say, "Oh, you have such a Dutch accent." Whatever. I don't even care about those comments. I am Dutch, so I have a Dutch accent. Deal with it. Now, the house prices in the Netherlands have been going up since forever. The house prices have been going up forever. So during COVID, I was considering buying an apartment in Amsterdam. In fact, I was considering buying an apartment since 2017. But everyone around me told me like, yeah, no, but the prices are so expensive. They keep going up every year. At one point, they must correct down and the market must cool off. Well, if you look at it, that really didn't happen. Yes, on the short term, prices can go up and down, but over the long term, the prices tend to go up. You know, space in Amsterdam is very scarce. We have got a very small city center. There's a lot of demand for houses. A lot of people want to live there. More recently, it's also becoming very popular for expats. So there's a lot of demand and supply is very scarce. So you could probably argue that whenever you own a prime piece of real estate in Amsterdam, the price of that real estate will go up forever. Very simply because supply is very scarce and demand keeps on going up. And that usually means that the price of an asset will go up. Similarly, when you own a prime piece of real estate in Manhattan, well, also when you look at Manhattan, yes, I mean, you've got stuff like the 2008 financial crisis where, you know, the whole real estate market collapsed. But even afterwards, like a few years later, the price of that real estate still went up again. And it's exactly for the same reason as in Amsterdam. The amount of supply of available houses in Manhattan is just very small. So if you own a prime piece of real estate in Manhattan, it is very likely that it will go up forever because the demand will remain there forever. So the question is, or the reason why I am sharing these examples of, you know, real estate in Amsterdam and Manhattan is because I see Bitcoin as something very similar. Right now, Bitcoin is at 100K, which in absolute terms is really high. However, when supply is very limited and demand keeps on going up, just like houses in Amsterdam and Manhattan, then even though it's expensive right now, it could become even more expensive in the future. And there's also something else in force, which is the fact that fiat currencies, which we're now using to express the value of Bitcoin, so oftentimes Bitcoin is denominated in dollars, but you can also denominate it in euros. So right now, Bitcoin is hovering around 100K. But what is happening is that the US government keeps on printing more and more money. The national debt of the US is right now around 36 trillion. That's 36 with 12 zeros behind it. For most people, that's an astronomical number that most people even can't get their head around. So while governments keep on printing money, what happens, or what the result of that is that every unit of money that's in circulation becomes worth less. We call that inflation. So if you have $100 in your bank account right now and you want to use that to buy goods and products, then goods and services, then in a few years from now, due to inflation, you will be able to buy less goods and services with the same amount of money. So that means that your money is becoming worth less over time. And if you're thinking that the dollar is the only currency that's experiencing inflation, you're wrong. Basically, every major currency in the world is suffering from inflation. For example, the euro is also very rapidly losing its purchasing power due to inflation. So here, like €1 today would be equivalent to 1.4 euros 20 years ago in terms of what it could buy. So yeah, one of the people that I really look up to for, you know, understanding the world of finance and becoming financially free is Robert Kiyosaki. And in his book, he explains that savers are losers and cash is trash. You know, when I first read those lines, it was very, you know, I couldn't really wrap my head around it because I thought, you know, 100 euros is 100 euros. But no, it's not 100 euros because the value of money becomes less over time due to money printing of governments. And here's the thing, because Bitcoin has no top, because fiat has no bottom. So here you see this devaluation of the currency keeps on going on forever because governments keep on printing more money. And this will never stop. And with money becoming worth less over time, it means that if you express the value of Bitcoin in fiat currency, then there will be no top because money will always become less over time. So if you compare it to Bitcoin, it has a hard cap of 21 million Bitcoin, then I do believe that even though a Bitcoin is 100K in dollars today, there will be no limit to how high Bitcoin can go because there's a fixed amount of Bitcoin, whereas there's an unlimited amount of fiat currency that will ever be available. So Bitcoin has no top because fiat has no bottom. This picture very strongly embodies the message that I want to convey to you in this video. Now, there's something different happening as well right now. Right now, the total wealth that's allocated across assets worldwide is around $900 trillion. A lot of it is in real estate, bonds, cash, equities, art, gold, and just around... This picture is slightly outdated. So gold is around $17 trillion right now. Bitcoin is around $2 trillion. But what we're expecting is that we're going to see a redistribution of wealth across these asset classes. So right now, the baby boomers, like, for example, my father, who is in his 70s, he is part of a generation that right now holds most of the wealth. And they really love stuff like real estate, stocks, and that's where they're holding most of their wealth. So here you're seeing, for example, gold is another one of those asset classes that baby boomers love. So gold has a market cap of around 18 trillion. Then we see all of these companies like Apple, Nvidia, Microsoft, Alphabet, Amazon. So those are trillion-dollar companies. Then we have Bitcoin, which right now is around a $2 trillion market cap. Silver, $1.7 trillion market cap. But yeah, what I mentioned, today we're seeing an aging population. So right now, the very bulk of the population is between 40 right now, so in 1960s, we saw a very young generation, the baby boomers. So the bulk of the population was very young. And now that same group of people that were young in the 1960s are now approaching their 70s, 80s, and they're now retired and they are soon going to pass away. And what is going to happen when those baby boomers pass away, the wealthiest generation in the world? Well, boomers are the wealthiest generation that has ever lived, and millennials are the biggest losers thanks to the economic crisis. But those baby boomers are soon going to pass away, and what's then going to happen is a massive wealth transfer. So millennials, which are their children, stand to become the richest generation in history after a $90 trillion wealth transfer. So when these baby boomers are expected to die, then millennials, my generation, is expected to inherit that money. And what do millennials like? They like digital assets, crypto, Bitcoin. So when we're looking at the wealth distribution right now across these different assets, we're expecting that a lot of it will be reallocated into digital assets and Bitcoin. So that's why I also believe that, yeah, 100K Bitcoin today might sound expensive when you compare it to the prices that we've seen in the past. But if you look into the future, taking into account that, you know, we're going to see a big wealth transfer from baby boomers to millennials, and they're probably going to invest more in Bitcoin. We see that, you know, money will be printed, more money will be printed. So the dollar, the euro, the yen, the pound will all go down in purchasing power, and people are looking for great alternatives to store their wealth in. And yeah, Bitcoin offers a really great safe haven for people that are looking for a good store of value. And that's why so many investors have been attracted to Bitcoin. And that's why it became the best asset class of the past decade, because it generated 230% annual returns between 2010 and 2020. So the question is, if you look not in the rear view mirror, but if you're looking to the front, into the future, and you're thinking like a grand chess master and thinking 5, 6, 10, 20 moves ahead and anticipating what's going to happen next in the market, let me know in the comments below. Do you think Bitcoin right now is cheap or expensive? Let me know in the comments. I'm really curious to hear your thoughts. And if you enjoyed watching this video, then do me a quick favor, smash the like button, then I know that you got good value out of it. And if you haven't done so yet, also make sure to subscribe to my channel, because I'm going to be posting regular videos just like this one to help you to maximize your returns as a crypto investor. All right, thank you so much. Take care, have an amazing day, and I'll see you in the next one. Peace out.